Welcome back to the channel. Today I want to break down the market pullback that we're experiencing right now. Something that new investors are probably getting a little spooked, want to sell out of all their stocks and run for the hills. But here's the truth. What's happening right now is actually very healthy for the market, and it's resetting some valuations that were pretty lofty. In a way, long-term investors should love this opportunity. Let's break it down real quick. A pullback is a short-term drop in stock prices, generally from 5 to 10%. Anywhere from 20 to 30% is a full-on crash, or even more than 20% is a full-on crash. So right now we're not in a crash. It's not the end of the world just yet. It's always a possibility. The markets, you can't predict the markets. There's always something that could come out, like COVID came out. It's a normal part of how markets breathe and the market rotation, human emotion, big money selling out. Why prices get out of control? Sometimes stocks do run up pretty fast, like we were experiencing. We had so many green days in a row. It was kind of expected at some point. Investors get very excited, momentum, traders pile in. A lot of people were trying to chase returns end of the year, probably getting pretty damaged at the moment. And suddenly you have companies trading at prices that are way above what their earnings or revenue supports, kind of like Tesla. But that's when valuations get stretched. Think of it like pulling a rubber band further and further. At some point, it has to snap back. And that snapback is the pullback. Or it could even snap. How pullbacks reset valuations: when stocks run up too far, the price to earnings, price to sales, and price to cash flow ratios all get inflated. A pullback does lower the prices while the company's earnings stay the same, meaning valuations come back down to earth. The reset does a few things. It makes good stocks cheaper again, clears out the emotional traders, reduces market risk, and sets the stage for healthier long-term growth. I have a mindset shift. Pullbacks aren't something to fear. They're something to use. There's something to see as an opportunity, kind of like a Black Friday sale. If you're dollar cost averaging in the market, a pullback means you automatically buy more shares at lower prices. That lowers your cost basis on your stocks that you own and increases long-term returns. Warren Buffett literally waits for these moments, and you should too. There's always going to be pullbacks along the ride. The S&P 500 has had dozens of pullbacks, but the long-term trend is always up. Pullbacks are temporary, growth is permanent, as long as the businesses you buy keep making money and you're doing your research on them. What I'm currently doing, I'm reviewing the valuations of companies that I personally own, looking for quality stocks that just got cheaper and are oversold. I'm avoiding chasing the hype, staying consistent with my investing plan. This is the mindset that helps you build wealth over years, not just days. If this helped simplify what's happening in the stock market right now, hit that like button. Thanks for watching. This is Stock Brock. Peace.